Hey, good morning, everybody. Helen-Ann here, and welcome to the Wednesday Wake Up with the Jersey Shore real estate experts and living at the Jersey Shore. Today, we have some hot topics to talk about it. You know, you've been dreaming about it for years. Sitting on the deck, sipping the coffee, relaxing. Not a rental, not a friend's house, your place. Finally, a place of your own. Shore ownership. You've been dreaming about it forever. Finally, it's yours. But here's what some buyers are running into and what some agents don't even know. A lot of things have changed with regards to lending requirements on the financing side. And it's really important that we really dive into this and understand what's going on. This is important for all New Jersey condominium owners. If you're thinking about buying a condominium, own a condominium, or you're thinking about selling your condominium, this is something that we really have to talk to and dive into. Let's get right into it. What's happening? When you decide you want to buy a condominium, you put forth your offer with your agent, offer gets accepted, you find a lender. A lot of you are finding lenders from home. A lot of you are finding lenders from online. Many of you use Zillow and Trulia and different things. A lot of you are price shopping, trying to get low rates. A lot of you are trying to get low fees. We see it happen a lot here at the Shore when it comes particularly to condominium financing. Those online lenders, your lender from home, they're absolutely going to be able to help you with a single family purchase here at the Shore. But when it comes to condominiums, that's a whole nother animal that many lenders truly do not understand. And we are finding over and over again, time and time again, whether I'm on the buying side of the transaction or the selling side of the transaction, the potential owner comes forward, the guy that's under contract comes forward and says, hey, I've got this lender. They gave me a great rate. This is who I want to use. And the next thing you know, we're well into being under contract and things just start falling apart. Let me help you understand what's happening when you apply for a mortgage. When you apply for a mortgage as a borrower, as a buyer, your lender is looking at all of your finances. They're going to ask for 2 years worth of tax returns. They're going to ask for 2 months worth of most recent bank statements. They're going to ask for your 2 most recent pay stubs. If you're self-employed, they're going to ask for things with regards to that. They're going to look for business tax returns, P&Ls, all that great stuff. They're going to look at your debt to income ratio, and they're going to look at your ability to repay this loan. Once that lender has confirmed you're a qualified buyer, they then do something called condo review. Now you might be like, well, condo review, what's the big deal? Well, the big deal is many out of the area lenders do the condo review and condo approval at the very end of the escrow period when it's getting very close to time for you to buy your house, very close to the time for the loan to be funded. And what we're finding out is many of these out of the area lenders that do not do a lot of condominiums, send this off to a condo review department. A lot of these departments are not in-house. They're off sitting someplace in an office, and now you become a number. You have no control over the speed of that condo review, and you have no idea what's going to happen, and the wheels fall off the bus. I most recently had a transaction. I represented the seller. Buyers came in with a local agent, had a local lender. During the loan application process, these buyers found out that Rocket Mortgage could give them a better interest rate. Well, they wound up going with Rocket Mortgage. Rocket Mortgage could not give them a better interest rate. They wound up bouncing to another lender and didn't go with the very first local lender that we had all thought we were going to have a great relationship with, that we knew could fund the loan. It's 2 days before closing, and we get an email from the lender saying that they're not going to be able to fund the loan, that their condo review department has some questions and they need to dive into it. Well, when we got to the bottom of what the nature of those questions were, what they were asking for was just not consistent with the nature of the project. I called in another local lender who I've worked with many, many times. His name is TJ Hildebrand. He's with Advisors Mortgage Group. TJ has been funding loans here in the Wildwoods and Southern Cape May County for probably close to 30 years now. He and I both got into business around the same time. I reached out to TJ and said, look, I've got a problem. This lender is asking for things that I know are not consistent with what I know about condominium underwriting. Can you help me? And there's times when we will call him and he's able to come in and essentially say, give me the loan, I can close it, let's start over, and he'll close the loan in 10 days or 2 weeks. True hero. Chef's kiss, true hero. But in this situation, he said, listen, let me get involved. Let me talk to the lender. They're asking the underwriter is asking things of them that are not consistent with the loan. Unfortunately, the lender didn't know what they were looking at. The underwriter didn't know what they were looking at. And quite frankly, they were looking at things that just were not consistent with the project. I had to find someone local that knew what he was doing to really help reel us in. And again, that was TJ Hildebrand from Advisor Mortgage. The reason why I'm mentioning TJ is there's been many times in the past where I've had what I'm going to call a stale sale. I'm about to take a listing in a building and there hasn't been a sale in that building in a handful of years. It is not uncommon for me to call TJ and say, do me a favor, my friend, look at the budget, look at the insurances, and make sure we are cool and good to go. I don't like to take listings in properties where I know that I can't sell the product. And I don't like to show buyers condominiums in buildings where I know that they can't fund the product. So it's really important that you on the listing side of things know what you got, and you on the buying side of things know what you got. So what's really changed dramatically with regard to Fannie Mae underwriting is some of these project reviews. Before, there was a very limited review on 4 units or less, very limited review, 2 units or less, no review. That has changed now, folks. Fannie Mae and Freddie Mac are reviewing all condominium projects, all projects. What that means is you have got to make sure that your budget is in order, that you've got condominium documents in order, that your insurance is in order. And you may say, well, I don't know how I would know that. Well, I can tell you right now what TJ is offering for folks, and I would highly suggest that you take advantage of this offer if you are considering selling your condominium or if you are a board member in a building, is please reach out to us. We're going to provide TJ's information below. TJ is going to really allow you to send him all your documents, budget, condominium documents, your financials, most importantly, your insurances. Budget and insurances are really the most important things. We need to look at your budget because we have to make sure that as of right now, well, actually, we now have to have at least 15% of our replacement costs have to be allocated in our budget. So if your operating budget is $10,000, you have to have $1,500 set aside in the capital reserve fund for your reserve funding. A lot of people only have 10% set aside in reserve funding because up until now, 10% was all that was required for lenders, and 10% was all that was required for condominium associations to be consistent with most of the rules of your association. That's now changed. The New Jersey state law has now changed, 15%, and underwriting rules have now changed, it's 15%. The 15% is not going to come into effect for a few more months, but what's most important to understand is all of you, your budgets for the 2026 year have already been set, right? So if you're thinking about putting your condominium on the market for sale in August or September for a fall sale, there's a really good chance that you don't have enough money in your capital reserve fund to meet the lending requirements of whoever your borrower is going to be, whoever your buyer is going to be. So I think it's really important that if you're a condominium owner, that you're taking your time, that you're asking your association, you're asking your board for copies of your master deed, copies of your bylaws, copies of your meeting minutes, most importantly, copies of your most recent budget, copies of your most recent insurances. It's really critical that we make sure that we are insured properly, primarily because if, God forbid, there's catastrophic loss at your association, the last thing that you want to have happen is find out your place burnt to the ground, and now you all as a group do not have adequate replacement coverage to rebuild. It's something that by the grace of God, I haven't had to witness or experience here at the Southern Jersey Shore, but I have seen it happen in other states where there has been catastrophic loss to associations. And if you are not properly insured, it's going to be a problem. You're not going to be able to rebuild, and your joy and dream of shore ownership just literally went out the window. So it's really important to understand if you're considering buying a condominium, not only is the lender analyzing you as the borrower, making sure that your financial ship is tight and that you have the ability to repay the loan, they're then going to look at the condominium association, because your lender is about to get in bed and become a piece of a pie. And they want to make sure that if they're getting into this relationship, that it's a solid relationship, that everyone's insurances are good, we've got money to make repairs. And it's not uncommon for associations to really want to have a real tight budget and not be spending a lot of money. And I get that. But there becomes a time when you've got to start putting money aside, you've got to start reinvesting, you've got to start making repairs in your association, or you're going to find yourself in trouble. But the biggest thing to really understand here, folks, is that lending has changed. And if you're not working with an agent who's doing a lot of transactions, they're not going to know this. And if you're not working with a lender who is fluent in condominium funding, they're not going to know this. We here at the Shore fund a lot of funky products. We have non-warrantable products. That means that Fannie Mae and Freddie Mac are not going to back them. Your condo-tels, your commercial mixed-use products, smaller square footage, your seasonal products. All these funky little things you can't use year-round, they're non-warrantable products. And what that means to you is it's going to be a little bit more difficult for your buyer in the event that you want to sell your home it's going to be a little bit more difficult for your buyer to get funding. And if we know this in advance, we can strategize and set you up for success in the event that you wish to sell your condominium. Here's an interesting fact for you. 2025 survey was done of over 700 board members, managers, and real estate professionals, and 42% of them were unsure of whether or not their condominium community was even eligible for federal-backed financing. That's crazy. Among communities already deemed ineligible, 64% said that them not being eligible for Fannie Mae and Freddie Mac federal-backed funding was negatively affecting their resales in their association. When you have something that you can't sell, it's not a desirable product. And when you guys are looking here at the shore for condominiums and you call me and say, hey, this place looks really great for $300,000. Yeah, well, the reason why it's $300,000 is because it's 400 square feet. You can't use it year round. You have to rent it, and there's all kinds of funky restrictions. So when the price seems too good to be true, it's because there's going to be some use restrictions and you're not going to be able to use your place. So before you get too excited, make sure they understand what's going on. I can't stress enough here, folks, the importance of using a local agent and the importance of using a local lender. Local lenders know what is warrantable and what's not warrantable. Local agents know. We know the buildings that have a high renter concentration. We know the buildings that don't have a budget. We know the buildings that don't have good insurances. We know these buildings, and we can help put you in a place that's going to be the best fit for you and what your future is for what you're trying to do here at the shore. A good lender is key, and you don't know that you have a lending problem until you have a problem, and a lot of times it's the 11th hour. I cannot highly recommend TJ Hildebrand from Advisors Mortgage enough. He is offering this condo pre-flight program. Again, he's advertising for 11 units or more, but because Fannie Mae underwriting guidelines have dramatically changed literally in the past couple of weeks while we're under contract, guidelines are changing. It's really important that you are working with somebody and speaking to someone that knows what those guidelines are and can offer you specific guidance. TJ was a lifesaver in helping our transaction get across the table. He had no skin in that game other than doing a personal favor and really helping me out. And I think I made a lot of deposits in our professional bucket, so I was able to make a withdrawal, and I'm really grateful for him. And I'm hopeful that other agents will consider working with him. And if you are considering purchasing a condominium or you are in an association, it's a really good idea to maybe have this gentleman take a look at some of your stuff and just make sure that you are set up for success as a group. What many of you don't understand is that many of these associations are not run by property management companies. Many of these associations are not being professionally managed. They're run by individuals. My husband was the president of our association for many, many years. Our treasurer happened to be a guy that was like the treasurer for, or a finance guy for a hospital system. It worked out that we had good people in that position. But at many associations, they're lay people. They don't know, and they're doing the best that they can with the job that they've been given. But because they don't know, sometimes they can make mistakes. So really just important that we make sure that when we're working with someone, that we're working with professionals. Before you fall in love with a condominium, there are some questions that you should be asking first. We're going to attach a PDF of those questions in case anybody has a desire to download those and say to your agent, hey, I'm looking at condominiums. Please make sure that the condominiums that we're going to be looking at meet these requirements, because I don't want any monkey business when it comes time to the end. When it comes time for me to get close to closing and I've got the U-Haul packed up and babysitter for the dog or a babysitter for granny and I'm coming to the shore to buy my condo, I want to make sure I'm not going to have any problems. If a lender comes to you with a deal that seems too good to be true, it probably is. The right shore condo at the right price with the right financing, it's one of the best investments that you can make. The lifestyle is real, guys. The history of appreciation is real. The rental income potential is real. But what we don't want to have happen is that dream be squashed because you become disheartened, right? Because right at the very end, you found out that the lender that you established a relationship with made promises to you that they could not keep because they truly did not know what they were doing. I cannot stress enough. Buying and selling real estate is not like buying a gallon of milk. Doesn't matter whether you go to the Heritage or the Wawa or the Richland or the Aldi's or the Acme. Milk is milk is milk is milk is milk. It doesn't matter if you buy it in Cape May or North Wildwood or up at your house in Philadelphia or Pennsylvania, right? Houses aren't that way. Houses are not commodities. And it's really important that you know what you're buying, where you're buying, and what's going on around it. And truly working with someone local as an agent and a local lender are going to be the ones that get you across the finish line. I cannot stress this enough. Thank you for following us. I want to make sure you understand, linked below, we have some past videos that we have done. We have done some very deep dives into some new laws that have gone into effect for New Jersey with regard to structural engineering studies, new laws with regards to money capital reserve studies, and now we have some new regulations coming into play with regards to underwriting. It's really important that you folks follow, stay along. You can, again, take a look at any of the videos below that we have done in the past on some of these really hot topics, just to kind of bring you up to speed. If you're like, I don't know what she's talking about, just rewatch, catch up real quick, and then you can be right here with us. Thanks for following the Jersey Shore Real Estate Experts, and thank you for entrusting us with your dream of shore ownership here at the Southern Jersey Shore. Stay tuned, and we look forward to seeing you again. Make sure you like, hit subscribe, all those fun buttons below, so that you don't lose us and that we can keep track of you. Thanks again, guys. Take care.